Hey, future investors, imagine waking up one day knowing your money is working for you, even while you sleep. Sounds pretty amazing, right? What if I told you that the stock market is your ticket to making that dream a reality? By the end of this video, you'll know exactly where to start your journey into the world of investing. Now, I get it. Investing can seem intimidating. Maybe you're thinking, I don't know enough. Or maybe it's too risky. I could lose everything. Trust me, you're not alone. A lot of people feel this way when they're just starting out. But here's the truth, those fears. They're just myths waiting to be busted. The good news is, investing doesn't have to be overwhelming or reserved for the ultra-wealthy. In fact, anyone can do it, even if you're starting with just a few dollars. This video is all about simplifying the process, cutting through the jargon, and giving you the tools to take that first step toward building wealth. And let me tell you this, learning how to invest isn't just about growing your bank account. It's about freedom. It's about creating a life where you call the shots, where your money works for you, instead of you always working for your money. So if you've ever wondered where to start, or if investing is even for you, stay tuned. Because today, we're not just talking about investing. We're talking about the first step toward your financial future, the foundation that can set you up for a lifetime of success. Are you ready? Let's jump in. Part 1. Why invest in the stock market? Let's start with a little story. Picture this. A young Warren Buffett, now one of the richest men in the world, was once just a kid selling chewing gum door to door. By the age of 11, he made his very first investment, 3 shares of a company called City Service for 38 each. That's it, just 38 per share. And today, he's worth over 100 billion. Why? Because Warren Buffett understood something most people overlook: the power of starting small and letting your money grow over time. Here's a mind-blowing fact for you. If you had invested $1,000 in the S&P 500 in 1980, you'd have over $100,000 today. That's the magic of the stock market. It lets your money work for you through something called compounding. Essentially, your money earns interest, and then that interest earns more interest. It's like a snowball rolling downhill. It just keeps getting bigger. But why should you invest in the stock market? Let's break it down. First, investing helps you beat inflation. What's inflation? It's when prices go up over time. So the $100 you have in your pocket today won't buy as much 10 years from now. But if you invest that $100 in the stock market, it has the potential to grow and outpace inflation, keeping your purchasing power intact. Second, investing is one of the most reliable ways to build long-term wealth. When you invest in the stock market, you're tapping into the growth of the global economy. Over time, companies innovate, expand, and generate profits. And as a shareholder, you get to share in that success. And here's the coolest part. Investing means you can actually own a piece of the companies you love. Whether it's the smartphone you use, the electric car you drive, or the coffee shop you can't get enough of, chances are those companies are publicly traded. By investing in them, you're not just a customer, you're a part owner. Here's the thing. Investing isn't just about making money. It's about empowerment. It's about taking control of your financial future and putting yourself on the path to financial independence. Imagine being able to travel, retire comfortably, or even start your own business, all because you made the decision to start investing today. So, whether you're starting with $10, $100, or $1,000, remember this. The stock market isn't just for the rich, it's for anyone willing to take that first step. You don't have to be perfect, you just have to start. The sooner you begin, the more time your money has to grow. Stick with me, and we'll build that future together. Let's move on to the next part, tackling the fears and myths that might be holding you back. Part 2. overcoming fear and myths. Let's be honest. Starting something new can feel scary, especially when it comes to investing. Maybe you've heard stories about people losing money, or you're convinced it's only for wealthy experts. Well, I've got great news. Most of what's holding you back is based on myths. So let's bust them one by one. Here's a big one. Investing is only for the rich. It's simply not true. In today's world, you can start investing with as little as $10. Yes, 10. Thanks to apps like Robinhood or platforms like Fidelity, you don't need thousands of dollars to get started. You can buy fractional shares, meaning you can own a slice of your favorite companies, even if their stock price is in the hundreds. Next, there's the myth that I need to time the market perfectly. People think they have to buy at the lowest point and sell at the highest. But here's the truth. No one, not even the world's top investors, can perfectly predict the market. The key isn't timing the market, it's spending time in the market. The longer you stay invested, the more you can benefit from the ups and downs, thanks to the magic of compounding. So stop waiting for the perfect moment, because the best time to start investing is today. Now let's tackle the big one. It's too risky. Look, every investment carries some risk. But here's the secret. Diversification is your best friend. Instead of putting all your money into one stock, you spread it across multiple investments, like index funds or ETFs that track the entire market. This way, you're not relying on just one company's success, and your overall risk is much lower. Diversification is like having a safety net. Even if one investment doesn't do well, others can balance it out. That's how you protect yourself while still growing your money. So let me ask you, what's holding you back? Is it fear? Confusion? Something else? Drop a comment below. I'd love to hear your concerns and help you tackle them. And now, I want you to take a deep breath and hear this. Every great investor started exactly where you are right now. Warren Buffett started with 38 op. Ray Dalio, he made plenty of mistakes early on. Mistakes are part of the journey. They're how you learn, grow, and ultimately succeed. Think of investing like learning to ride a bike. At first, it feels wobbly, and you might fall a few times. But with practice, you get the hang of it. And before you know it, you're cruising confidently toward your goals. Fear of the unknown is normal, but don't let it stop you from moving forward. Take that first step, even if it feels small. Trust me, your future self will thank you. And remember, you're not alone in this journey. Stick around, and I'll guide you every step of the way. Up next, we'll break down the stock market basics, what it is, how it works, and the key terms you need to know. Let's keep this momentum going. Part 3, Stock Market Basics. Okay, now that we've addressed your fears, let's dive into the good stuff, the basics of the stock market. Don't worry, I'm keeping this simple. So by the end of this section, you'll feel like you've got a solid foundation to start investing. 1. What is the stock market? First things first, what is the stock market? Think of it like this. The stock market is a giant marketplace where you can buy pieces of companies you believe in. These pieces are called stocks. Owning a stock means you're a part owner of that company. Yep, even a tiny fraction makes you a part of the team. This marketplace isn't just one place. It's made up of exchanges like the New York Stock Exchange, also called the NYSE, and the NASDAQ. Think of these exchanges as the hubs where buyers and sellers come together to trade stocks. And these exchanges help set the price of a stock based on supply and demand. For example, if everyone wants to own shares of a company like Tesla, the price goes up. If fewer people are buying, the price drops. Simple, right? 2. Key terms you need to know. Now that you know what the stock market is, let's cover a few key terms you'll hear a lot. Don't worry, these are easier than they sound. First, stocks. Like I mentioned earlier, owning a stock means owning a piece of a company. So if the company does well, your piece of the pie grows in value. Easy enough. Next, dividends. Some companies share their profits with shareholders in the form of dividends. It's like getting a thank you check for investing in them. Not all companies pay dividends, but many stable ones, like Coca-Cola or Johnson & Johnson, do. Now, ETFs, or exchange-traded funds. These are like pre-packaged bundles of stocks. Instead of buying individual stocks, you can invest in an ETF and instantly own a little bit of multiple companies. It's great for diversification. Finally, index funds. These are similar to ETFs, but designed to track the performance of an entire market index, like the S&P 500. When you invest in an index fund, you're essentially betting on the overall market's growth instead of individual companies. 3. How do you make money? All right, here's the part you've been waiting for. How do you actually make money in the stock market? First, through capital appreciation. This means the stock you bought increases in value over time. For example, if you buy a share of Apple for $100 and it grows to $150, you've made $50 in capital appreciation. Simple. Second, dividends. Like I mentioned earlier, these are extra cash payouts from companies. Over time, dividends can add up and even be reinvested to grow your portfolio faster. And lastly, your strategy. You can take a long-term approach where you hold stocks for years to benefit from consistent growth, or a short-term approach where you buy and sell stocks more frequently. But here's a pro tip. The stock market rewards long-term thinkers. Think of investing like planting a tree. You don't see it grow overnight, but with time and care, it becomes something massive and life-changing. So now, you know the basics of the stock market, what it is, some key terms, and how you make money. Feeling a little more confident? Great, because up next, we're getting practical. I'll walk you through exactly how to set up your first investment. Let's do this. Part 4, setting up your first investment. All right, it's time to get practical. You've learned what the stock market is and why it's a powerful tool for building wealth. Now, let's talk about how to set up your very first investment. Don't worry, I'll walk you through this step by step. It's easier than you think. Step 1. Define your goals. Before you invest a single dollar, you need to answer one big question. Why am I investing? Your goals will guide every decision you make. Are you saving for retirement? Planning to buy a home? Or is your ultimate goal financial freedom? Having enough wealth to live life on your terms? Take a moment and think about it. Your goal will determine things like how much risk you're willing to take and how long you plan to stay invested. And here's the good news. No matter your goal, there's an investment strategy for you. Step 2, choose your platform. Next, you'll need a platform to buy and manage your investments. These are called brokerages, and there are plenty of beginner-friendly options to choose from. Platforms like Robinhood, Fidelity, and Vanguard make it super easy to get started. Robinhood is great if you want a simple, app-based experience. Fidelity offers tons of educational resources, and Vanguard is known for its low-cost index funds. Take a look at what each one offers and pick what feels right for you. Don't overthink this step. Many of these platforms are designed for beginners, so you really can't go wrong. Step 3. Start small. Now comes the exciting part, making your first investment. And here's the best part. You don't need a ton of money to get started. In fact, you can begin with as little as $50 to $100. For beginners, I recommend starting with ETFs or index funds. Why? They're diversified, meaning your money is spread across multiple companies, which reduces risk. Here's a fun fact. The S&P 500, which tracks the top 500 companies in the US, has averaged about 10% annual returns over the past few decades. That's why it's a favorite for beginners. Step 4. Diversify. Now let's talk about one of the golden rules of investing. Don't put all your eggs in one basket. Diversification is your safety net. Instead of buying one or two stocks, invest in ETFs or index funds to automatically diversify. Think of it like this. If one company in your portfolio doesn't do well, the others can help balance things out. By diversifying, you're setting yourself up for long-term stability and growth. Step 5. Keep learning. Finally, the most important step, keep learning. Investing isn't something you master overnight. It's a journey. There are tons of free or affordable resources out there. Check out books like The Intelligent Investor or podcasts like We Study Billionaires. And of course, you're already doing a great job by watching this video. Remember, every expert was once a beginner. The key is to stay curious, keep asking questions, and never stop learning. You've got this. So there you have it. The 5 simple steps to setting up your first investment. Define your goals, choose your platform, start small, diversify, and keep learning. It's not about perfection, it's about progress. Ready to take action? Let me know in the comments. What's the first step you're going to take today? And don't forget to subscribe, because in the next video, we're diving into building a smart portfolio tailored just for beginners. I'll see you there. Closing and call to action. Oh, what a journey we've been on together today. Let's take a moment to recap the key takeaways from everything we've covered so you feel empowered to take that next step. First, the earlier you start, the more time your money has to grow. The stock market is like planting a tree. It takes time to see the results, but the sooner you start, the bigger the rewards down the line. Second, you don't need to be rich or a financial genius to start investing. Remember, you can begin with as little as $10, and platforms today make it easier than ever to get started. And third, long-term thinking is your greatest advantage. Forget about trying to time the market or getting rich overnight. The real magic happens when you let your investments grow steadily over years or even decades. Here's what I want you to take away. Your journey to financial freedom begins today. Don't wait for the perfect moment. Take that first step now. Whether it's opening your first brokerage account or investing in an ETF, remember, every expert was once a beginner. Just like you. You've got this, and I'm here to guide you every step of the way. Now, I want to hear from you. What's your first investment going to be? Drop a comment below and let me know. I love hearing your plans. And who knows, your comment might just inspire someone else to take action too. And hey, this is just the beginning of your investing journey. In part 2 of this series, we'll dive deeper into building your very first portfolio, so you don't want to miss that. Hit that subscribe button and turn on notifications so you're the first to know when it drops. Remember, investing isn't just about growing your wealth. It's about creating a life of possibilities, freedom, and success. The road to financial freedom starts with one small step, and today is the perfect day to take it. Thank you so much for watching. I'm so proud of you for taking this step toward a brighter financial future. Until next time, keep dreaming big and investing in your success.